You're going out with a bang, as Abby says. Is this as good as it gets?
All right, look, so we had an 18% increase in revenue to $6.4 billion. And when production was disrupted with this god-awful, unbearable pandemic and now the chip shortage, we as a company felt that we could offer our customers nearly new pre-owned and went into the marketplace and bought everything we could get our hands on. And with our brand and our customer experience and one price, we've driven pre-owned sales through the roof, far outperforming the industry and our peers. So a very smart move and certainly capabilities that AutoNation have. So pre-owned revenue was up 53% in the quarter, just to give you some idea.
Well,
we've taken appropriate pricing steps on new cars, considering the shortages, and we've been very optimistic and bullish about AutoNation as a company, as automotive as a sector, and we repurchased 11% of the outstanding shares just in the third quarter. If I look over the past year, we repurchased 27% of the outstanding shares. You put it all together, and you get a 115% increase in earnings per share.
So, Mike,
and a new all-time record.
Mike, I feel like you're proving
Yes.
Guy's point. Is this as good as it gets? Because at some point, there's just not going to be that kind of upside for used cars if the chip shortage winds up shaking out, which some say will happen in the back half of 2022. So, is this the top?
No, I would not say that at all for AutoNation as a company. You know, there's two different questions if you're asking about the industry or you're asking about AutoNation. So AutoNation has a unique, outstanding performance here because we've built a brand that spans America, and we have a digital platform, and we're growing organically with the building of our AutoNation USA stores, and we opened up 2 more in the quarter, and we have 12 more that we're building next year. So we're organically growing our footprint. We're taking here's the point, we're taking significant share in pre-owned, and I don't see that stopping. We're going to continue to do it. We have the brand, we have the capability to acquire the vehicles. So there's nothing that's not sustainable about that.
Mike, customers are paying sticker, which must be a bit of a shock to them. And I'm wondering whether or not long-term this is going to change behavior. Discounting has gone out of the window. Do you think we're moving into a new paradigm in the way that cars are priced and people buy them?
I would give you 2 insights here. One, I have always advocated within the industry the point of view that the production push liquidation system that's run by many manufacturers here in the United States is ruinous to the industry, and there's a better way to do it. And there was a lot of change after the bankruptcies in 08, 09, a more enlightened approach. And with this god-awful pandemic, I think there are more lessons learned that not overproducing is not only good for the manufacturers, suppliers, and retailer, but also good for the customers, because you're protecting the value of the vehicles that are already on the roads of America, which total 275 million. So the consumers in America are delighted with the value of their vehicle, and they're more looking at the difference between what their vehicle's worth and what they're buying. So that's why when you talk about inflation in auto and pricing, that's not how the consumer is looking at it. So I think there are deeply learned lessons here. And when production is able to resume to somewhat more close to trend, the other thing we're doing is selling vehicles on an incoming basis, and they come in and go out. So I think the huge inventories of the past are indeed in the past.
Mike, that's interesting, because that feels counterintuitive to the narrative that we hear a lot about, which is the just-in-time inventory world is what's out, and we're going to see broader inventory builds. Do you feel for now
those can both be those can both be true? So I think on the production side, just-in-time inventory arriving at plants where a plant can be shut down because there's a hiccup somewhere in Southeast Asia, I think that is definitely being rethought. As far as the consumer, though, now listen, it's a bit extreme at the moment, so I'm saying the truth is somewhere in between production push and what we have at the moment, that there is a better way forward.
Mike, do you think higher rates are going to change consumer behavior? Do you think that if they are having to pay higher rates on their credit cards, for their cars, and everything else, we're going to see a change in behavior? Do you think higher gasoline prices are going to change behavior?
All right, two things. I don't think we're anywhere near high interest rates. Now imagine, I've been in business 50 years. So now maybe higher is a correct word, but not high interest rates. Rates, rates are incredibly low. Listen, I've been in this business when rates were 18, 19, 20%. So I've seen it all. So, okay, there may be higher interest rates, but if you put it in historical terms, they're extremely attractive, particularly for a product that needs to be financed like automotive. Now, as far as gasoline prices, compared to, let's say, a decade ago, the fuel economy of vehicles in the United States, and particularly SUVs and trucks, has been dramatically improved. So the cost to drive a mile and consume gasoline has gone down tremendously. So I would say, look, nobody's happier. Nobody in America is happy about higher gasoline prices. The attitude in America is the Lord bequeathed cheap gasoline to America. That's sort of the mindset of the consumer. So nobody's happy about it. But the freak-out price, where you really change consumer behavior, is somewhere above $5 a gallon as a national average.
So we're just definitely not at all
We're far from
there
that.
yet, Mike. So before we let you go, this is your last earnings call, last earnings interview. You're going to be retiring. Where are you going on vacation first?
I'm going to stay right here in the good old America. Listen, I got more miles. I got millions of miles around the world. I love the world, but I love America the most. So I'm here in Miami. The season's about to start, and I'm going to enjoy it, and then ease into some travel.